I think that's a fair statement. When I first started trading, I was all over the place. But after several years of learning and making lots of mistakes, I began to feel like I had it all figured out. And then one trade completely wrecked me. I lost tens of thousands in a matter of minutes. And it felt like my whole life was crashing down around me. It wasn't until I later discovered the mistake that caused such a devastating loss. I've made it my mission to help others avoid the same fate. I spent countless hours poring over charts and backtesting various indicators and strategies. Through this process, I've learned which setups work and which ones don't. And now, I want to share this knowledge with you so you can start trading smarter instead of harder. Most traders, they use lagging indicators like RSI or MACD because they are easy to understand and use. The problem is that these indicators are reacting to price action rather than anticipating it. It's like trying to catch a falling knife. You might get lucky once in a while, but eventually you'll get cut. The solution is to use leading indicators that can help you spot trends before they happen. This way you won't and be caught off guard, and you will have time to prepare for what's coming next. There are many different types of leading indicators out there, and each one has its own strengths and weaknesses. So how do you know which one to use? That's where my expertise comes in. Over the past few years, I've done the hard work for you and tested out dozens of indicators. I've carefully analyzed their performance and fine-tuned them to come up with the perfect combination. What I'm about to show you is not available anywhere else. And if I were to post this information online, it would likely be buried under the sea of other useless indicators. That's why I've decided to keep it exclusive to my community. So without further ado, let's dive in. The first indicator we're going to talk about is called OBV, or the on-balance volume. This indicator is great at spotting momentum shifts in the market. It does this by calculating the net change in volume between the current bar and the previous bar. If the net change is positive, it means that there is more buying pressure than selling pressure, and the trend is likely to continue in that direction. On the other hand, if the net change is negative, it indicates more selling pressure and a potential trend reversal. The higher the OBV line is, the stronger the uptrend is. Conversely, the lower the OBV line is, the weaker the uptrend becomes. The same holds true for down. A higher OBV line indicates a stronger downtrend, while a lower OBV line suggests a weaker downtrend. Now here's the trick. We're not going to use OBV on its own. Instead, we're going to combine it with another powerful indicator called Chaikin money flow. This indicator takes into account both price and volume to determine the amount of money flowing into or out of the market. By combining these two indicators, we can get an even better understanding of the market sentiment and make more informed trading decisions. To do this, we need to first set up our charts with the OBV and Chaikin money flow indicators applied. The default settings should work just fine. Now, let's look at some examples. In an uptrend, the OBV and Chaikin money flow lines will be moving upwards, indicating that there's a lot of buying pressure in the market. Once the OBV line starts to cross below the Chaikin money flow line, it's a sign that the buying pressure is starting to weaken and a trend reversal may be imminent. Here's a chart of Apple stock showing this exact scenario. Notice how the OBV line crosses below the Chaikin money flow line right before the stock price starts to reverse. In a downtrend, the OBV and Chaikin money flow lines will be moving downwards, indicating that there's a lot of selling pressure in the market. Once the OBV line starts to cross above the Chaikin money flow line, it is a sign that the selling pressure is starting to weaken and a trend reversal may be imminent. Here's a chart of Netflix stock showing this exact scenario. Notice how the OBV line crosses above the Chaikin money flow line right before the stock price starts to reverse? But wait, there's more. We're not done yet. We have one more trick up our sleeve. To make our strategy even more effective, we're going to add another layer of analysis using Fibonacci retracement levels. These levels are based on the Fibonacci sequence, and they can help us identify areas where the price is likely to reverse. In an uptrend, we want to buy near the 618 Fibonacci level or lower. This is where the price is most likely to reverse upwards. In a downtrend, we want to sell near the 382 Fibonacci level or higher. This is where the price is most likely to reverse downwards. Let's take a look at an example. Here is a chart of Tesla stock showing an uptrend with the OBV and Chaikin money flow lines indicating we want to buy near the 618 Fibonacci level, which is around $1,400 per share. The price ends up hitting this level and reversing upwards, resulting in a nice profit. If you've been struggling with your trading, I strongly encourage you to try out this strategy. It's free to get started and you don't have anything to lose. I'm confident that this strategy will help you become a more successful trader. Let's move on to the next setup. The second strategy is called the double bottom reversal pattern. This pattern is characterized by a series of lower highs and higher lows, which indicates that the market is losing momentum and a reversal may be imminent. To identify this pattern, we need to first mark the swing low and swing high. The swing low is the lowest point between two swing highs, and the swing high is the highest point between two swing lows. Once we've marked these levels, we can then draw a trend line connecting the swing highs and another trend line connecting the swing lows. The intersection of these two trend lines represents the area where the market is most likely to reverse. Let's take a look at an example. Here is a chart of Google stock showing the double bottom reversal pattern with the swing highs and swing lows marked. We can then draw two trend lines connecting these points. The intersection of the trend lines indicates where the market is most likely to reverse. And sure enough, the price ends up reversing at this point, resulting in a nice profit. This is just one of many patterns that you can look for when trading. There are plenty more out there that can help you become a more successful trader. Just remember to always do your own research and never blindly follow someone else's advice. I highly recommend checking out this video next to learn about some more powerful trading strategies. I'll see you there.